again, chapter 7, we learned about how to make our purchases of inventory and how to journalize it. So let's take our thinking caps, okay, and let's rewind from 2 weeks ago, okay? So how do we journalize our purchases? That's what we're going to be doing here. And we're also dealing with our sales. So again, here we have our information, and we're also possibly might be dealing with returns. So let's go ahead and look at our example. And in this should be included a chart of accounts. So the way that you guys have printed it, you'd be scenario, chart of accounts, then your worksheet, and then your journal follows right behind it. So here's your chart of accounts, so make sure that you use it, okay? That's part of the step of the transaction analysis. All right, here's the worksheet, so we'd be able to properly calculate our answers and whatnot. And then lastly, we need to learn how to journalize it. So today, we're in for a treat. So let's get started. Number 1, your inventory method is perpetual and it's moving average. Okay, so make sure that you understand how to do moving average. Okay, so let's go ahead and begin. What happened on May 1st? And there's nothing on May 1st. Okay. Whoa. What in the world happened here? Okay, so it should be all in here. There you go. Purchase. Let me go ahead and copy this and place it over here. Copy this, okay, and I want to paste it here. There you go. We purchased 500 coffee. We purchased 500 brown mugs at $2.65 each. Freight is $100. And we purchased it on account from Cuppy's Co. Terms are 5%, 10 net 30. Oh, so we're dealing with also discounts too. So let's go ahead and okay, first off, what's the transaction that happened?
We purchased 500 mugs.
Good. Okay. Let's look at our chart of accounts.
Or are we journaling first, or are we going to the worksheet first?
Okay. Rule of thumb. You should always journalize first so you lay down your foundation.
Okay.
And then second you would do is go ahead and do your inventory worksheet to solve for it instead of solving for it in the journal and then having to re-enter it in when you do your inventory worksheet. So in this case, we're going to go first scenario step. Second step is chart of accounts. See if we even have those accounts in the first place, right? We're going to lay down our foundation, journalize, and then do the worksheet. So in this case, let's look at our chart of accounts. Do we have the necessary accounts that we are looking for?
Yes.
Okay. All right. What accounts are we using? Are you going to be using?
We're going to be using mugs, 150. I think.
Okay.
Mugs.
Mm-hmm.
Is that what it said, mugs?
Mm-hmm.
150, and then accounts payable, 201.
Good. So now we can go to our journal. Yes, go ahead.
I didn't say, I can't, oh, I can go back over here, I guess.
Oh, you needed the scenario?
Yeah, is it, oh, okay. So terms.
Mm-hmm. So the terms are 5%, 15, net 30. So now we can go to our journal and let's journalize this transaction. Let me go back. So May 1st. What was the transaction on hand on May 1st?
So we're doing accounts payable.
Okay, so is accounts payable your debit or your credit?
Accounts payable is our debit.
Why?
Nope. Wait. Dang it. Nope, it was a purchase.
Good. Okay, good. It's a purchase. Now, but with accounts payable, are we increasing money we owe or are we decreasing the money we owe?
We're increasing the money we owe.
And you how do we increase what is accounts payable? Like what type of account is it?
It's a expense account.
Not an expense because if we owe,
Liability.
it's a liability. And how do we increase our liabilities?
Yeah. Liability, so increase debit. Wait, okay. So it's a credit.
It's a credit, correct. So at least we establish our credit account. So what is supposed to go first? So I'll go ahead and indicate that this is.
Purchase goes first.
What kind of purchase are we making?
Cups.
Okay, good. So that goes first. Why? What makes it? Why do you need to? Why do you need to debit? Oh, sorry. Why do you need to debit your inventory? What is inventory? Say that again.
Asset,
It's an asset, and assets are normally what?
debit,
Exactly. And also, are we increasing our Are we increasing our inventory? Or are we decreasing it?
Increasing.
Exactly. So here, so I'm gonna go ahead and do mugs because that's what we have. Mugs, and it was for 150. The account number is 150. My credit account is going to be accounts payable. Let me just type in accounts payable. Payable, and we know it's the account number for that is 201. All right. Now this is where we can walk away because I don't want you to have to do calculations twice. So let's go back to the scenario and let's look at the information again. So on May 1st, we purchased how many mugs? At how much? And freight was? Okay, so 265, 100, 500. So here, I'm going to go ahead and go into my inventory worksheet. I know that I'm a moving average, so make sure I'm going to go ahead and indicate that up here. Moving. Just a little friendly reminder. And also, I want to be specific because the items I'm buying is mugs. All right. So the date was May 1st. We purchased a total of 500 items at $2.65 each. Freight was 100. Okay. So what's my calculation here? $13.25 for the purchases. And $14.25. All right. And because we only have one batch, I'm going to go ahead and transfer it over to here. And what is my cost per item here? $2.85 even, right? Is it even?
Yeah.
Perfect. Okay, so that's our average cost now because we only have one batch that we're dealing with for now. Okay, so now that we solved for everything, right? We have our purchase, we have our total price right here for $14.25, right? Now we can go ahead and indicate that in our journal, right? So we know that our total cost of the inventory was $14.25, and this is also $14.25. All right, I'm going to reformat this as well to reflect cents. Okay, good. Now I'm going to add a little description just so then I know who I bought this from and also remind myself that I have terms with them. So I bought this from Cuppy's Co. All right. How many items did I buy? I bought 500 mugs. Okay. Or I can, no. Yeah, just 500 mugs. You're good. Okay. At $2.65 each, just in case I make a refund. Terms are 5%, 15, net 30. Good. Okay. Okay. As long as you have the vendor, right? You know what the terms are and what you originally purchased it for. So that way, when you do calculate it, at least you know you're keeping track of which purchase you made. Okay. Good. Now we're completely done with our journal. We know that we're done with our inventory worksheet because we don't have to do any more calculations. So what has happened next? We returned 15 broken mugs for a full refund. Okay? So let's go to our chart of accounts. What are we looking for? Okay, we're dealing with perpetual inventory. What's the number one rule when we come into perpetual inventory?
The number one rule?
Mm-hmm.
That it goes in automatically?
Where? Where does it go? Where is in?
Into the journal.
Okay.
No.
Okay, not the journal.
At the same time.
I'm sorry, say that again, Tennyson.
Inventory updated at the same time.
Exactly. Wherever we put our inventory, we're taking out of inventory. So in this number one rule for perpetual inventory, everything goes into inventory, everything gets taken out of inventory. So in this case, we do not need a purchase returns and allowances because we placed it originally into our inventory, right? Does that make sense? Okay, so now that it's in inventory, now that we return something, we have to take it out of inventory. Okay?
So accounts payable and mugs are two.
Exactly. So in this case, our journal here, we're going to indicate the date, which was May 5th. And let's go ahead. And so we've returned a total of 15 broken mugs at a full refund. Okay? So my journal here. What was the date again? The 5th of May? Yes. So here we skip a line because we're dealing with a new transaction, right? It's a new day. So 5th of May, we are returning the coffee mug. So we're going to be taking out of inventory. So in this case, our credit is going to be 5 for the 15. It's going to be the mugs, right? We're taking it out of inventory. And as Miss Julie indicated, we're going to also refund the money out of our accounts payable, right? We're reducing how much we owe because they're essentially getting our money back. Okay, so in this case, yes, it's an accounts payable. We're reducing decreasing the amount that we owe. So yes, that is what is going to be here. And since we can just copy the information from above without having to look it up. Okay, now I'm going to go ahead and let's go to the inventory worksheet because now we need to calculate our total amount. So in this case, we've never seen what a return looks like. Pretty straightforward. Okay, so 5 of May, right? We're going to return 15 at how much? How much did it originally cost us to purchase it? $265. So our grand total that we are subtracting is going to be $39.75. So now we have to update our inventory. So in this case, now that we returned our items, right? We need to adjust our inventory because this $2.85 isn't going to be our cost anymore. Because we were funding 15 items, now we need to spread the freight of a cost of $100 amongst the remaining 485 items, right? So here, 500 minus 15, or you can cell reference, however you want to do it, is 485. Now we also need to recalculate this because it's no longer 1425. We are subtracting this 39.75 to get us now a 1385.25 as our new total cost, which if we calculate our new average cost, what is it? Say that again. So my question is, what is my new average cost per item? Yes. Okay. In this case, we weren't specific on how much you're going to round. Okay, that was just in a case where the let's say the inventory manager, the accountant tells you, hey, round to the 4th decimal place. In this case, we don't. We're not indicated that, so we're just going to leave that calculation either in Excel or calculator. Okay, and we're just going to solve that way. So in this case, there you go. Now that we solved how much, let's go back to our inventory worksheet. We solved how much we're actually refunding. We're going to get $39.75 back. So let's go ahead and indicate that in our journal. We're refunding $39.75, and therefore we need to take $39.75 out of our inventory. And in this case, you can go ahead and put in your description. Returned 15 broken mugs at $265 full refund. Okay, so we completed our journal. Okay. Any questions to what we just did? So we moved from scenario, chart of accounts, journal, then to our worksheet. We solve for the calculations, and then now we go back to the journal. Okay. So this is what we're going to be looking into when we dive straight into our fictitious business, our class project. Okay. So let's go ahead and do the next one. So on the same day, what has happened for the May 5th? What else did you do on May 5th? Wait, no sales tax? What's going on with this? I thought I had sales tax in here. Customer, let me see. Do I have any sales tax? I don't see any sales tax for any of the situations. Okay, so I guess we don't have sales tax. So let's go ahead and how do you journalize this? You sold 10 mugs at $10 each for cash. Does the worksheet say anything about sales tax? None. Okay. All right. All right. So let's go to our chart of accounts. And what do we need when we're dealing with the perpetual inventory? What are the items that what are the accounts that we need? We sold the coffee mugs, or I'm sorry, we sold the mugs for cash. Okay.
Cash.
Cash is going to be one of them. Yes. What else are we going to be dealing with?
Accounts receivable? No,
That's
it's not. No, because it's cash, so we're not dealing with account.
exactly.
Sales?
Sales, good. Anything
Can't do sales
else?
tax payable, because we can't do sales tax payable because we didn't do
Exactly.
sales tax.
So we don't need sales tax payable. Okay, so what else is there?
Would it be, cost of goods sold?
Cost of goods sold. And then what's the last one? Where are we where are we taking things out of inventory?
Clear the inventory.
Yes. Yes, I'm giving you a hint here. So yes, you're going because every time you sell something, right, under perpetual inventory, you are taking everything out of our inventory as well. So we have 401, 501, 150, and we have 102. All right, so I'm going to go ahead and lay down my foundation. So let's go ahead and yeah. So on May 5th, so May 5th, all right, I sold I sold the mugs for cash. So what is our accounts going to be looking like? What is going to go first?
Cash.
Cash, because we're receiving cash, right? We're increasing the money that we have. And we know cash is account number 102. All right. Now, what did we do to in order to receive the cash?
Sale.
We sold something. Good. So sales. All right, and sales was 401. Okay. Now, we can go ahead and calculate this. So let's look at how much we actually sold. So in this case, we sold a total of 10 mugs at $10 each. So what is my total amount that I'm actually calculating? $10 each. So I have $10 each and I sold how many cups? 10. It'd be 10 it'd be $100. Okay? I'm just going to copy this from here. So good. It is $100. All right? And then because we are dealing with perpetual inventory, we need to also update our inventory. So, what kind of account is what type of account is cost of goods sold?
it's an expense account.
Correct. And are we increasing that expense or are we decreasing that expense?
Increasing.
Increasing. So therefore, it's a debit account. Yes. Okay, I gotta fix my journal here. So, that's not what I want. Left in line. Okay. So I need to indicate here cost of goods sold, which we know was 501. And lastly, our inventory, right? We're updating our inventory, so therefore we're subtracting from our inventory. So mugs is going to be my inventory that I'm getting rid of, which is 150. Now, let's go ahead and calculate this cost of goods sold, all right, in our inventory worksheet. So on May 5th, we sold 10 cups. How much did it cost us to sell the 10 cups?
$28.56. So it would be at the 2.85.
Mm-hmm. All right. I'm going to practice this because I need to have it to be rounded to the nearest penny. So equal round.
Lynn, is it 10 marks or 20 marks? I used on 10 marks, right? Okay, sorry.
Well, I'm sorry?
Okay, right.
Yeah,
No,
we're on the
it's okay. It's
we're on the 5th. We're on the 5th. All right, so yeah, 10 mugs. So here we're going to practice our equal round, right? Because we need to find, this is what we're journalizing. So we need to make sure that it's rounded to the nearest penny, okay? And in this case, we're going to do our formula. So here's our formula, comma, I want 2 decimal places, right? Round to the nearest penny. And what do we get? Oh, wait. I think Julie said it already. $28.50. Okay. Okay, good. So $28.50. Now, because we've sold this item, do we still have 485 items left in here? No. So here, 485 minus the 10 items I sold. Now we are at 475. Here we are at 1385.25 minus what why are we timesing? Oh, okay. Minus. Oh, okay. There you go. 1356.69. So what is our new average cost per item now since we've sold our items, right? Okay, so we ended up with the same exact number. Okay, and I'm just going to expand it so we know it's that kind of number. And I'm going to highlight this and I'm going to get rid of it because, we don't need it anymore. We don't have it. Okay, so here is this number. And now I solved for my cost of goods sold. My cost of goods sold is $25.56. So now I can safely go to my journal and say I sold 28.56, right? Without having to calculate it twice, right? And then I'm going to indicate here, sold 10 mugs.
Lynn,
Yes.
the sold change with the inventory method that you use?
I'm sorry, so go ahead. What was that question?
Because I'm asking if we were to get the cost of goods sold just based on 265 10,
Mm-hmm.
it would be, so the cost of goods sold when you sell something is based on the inventory method that you use.
Correct, correct. Because remember, the price that we sell it for is including a profit, right? So this is what we are selling it for. Now, we also have to calculate as an expense how much did it cost us to sell the item. So the cost of goods sold is exactly what we did here, right, in our inventory worksheet. Up here it says we're solving for the cost of goods sold. So it's going to be for whatever costing method you are using. So in this case, we're using moving average. So this is the average for the amount of items you have currently. Okay? It's not LIFO or FIFO where you have to have batch 1, batch 2, batch 3. This is the average of the total amount that you have. All right. Did that answer your question?
Yes, it did.
Perfect. Okay, so here we're done with our inventory because we've updated it, correct? And then here we're done with our journal because we've entered in all of our information and we've also completed our journal here, right? Any questions so far? Okay, let's go back to the scenarios. So what happened here on May 6th?
We sold 20 mugs at $10 each to customer A on account. Terms 10%, 10, net 30.
Perfect. We sold 20 mugs at $10 each, right? And we sold it to customer A on an account, right? So let's look at our chart of accounts. So we sold to customer A. So what are we dealing with this time?
So we're dealing with cost of goods sold
Mm-hmm.
and sales. So that would be sales
Good.
on account that's payable.
Not okay, so
And then
are we dealing with our customer or our vendor? Are we owing money or
that
are
would be
they
a
owed?
customer.
Customer,
They
correct.
owe.
So when they owe us money, what do we call that?
Accounts receivable, right?
There you go, accounts receivable.
It's
Okay?
payable, receivable, right?
Yes. So 103 for accounts receivable. And again, we're going to be looking at our inventory. Okay? So let's go ahead and lay down our foundation. So on May 6th, right? We are we sold our items on account. Okay? And that was 103. Right? And we already have our indicator here because we made a sale. So therefore, it's sales. Okay? And this was 401. Okay? Now, how many items did we sell to this customer? 20 at how much? $10 each. So, in this case, what is our total amount here? Good. 200. That's correct, right? We're dealing one section at a time, so we're dealing with just the sales. Okay? And just like from above, because we sold something, right? We also need to calculate the cost of goods sold. And we also need to update our inventory. Okay, and cost of goods sold was 501 and 150. All right. So let's go ahead and go to our inventory worksheet and solve for how much it cost us to sell those 20 items. So in this case, May 6th, 20 items at this 5712 is going to be our cost, our total cost for selling those items. All right. Okay, so let's go ahead and update our inventory.
So you wanna subtract 20 from the quantity of 475?
Oh, excuse me. Let me undo that real quick. Okay, so we're going to take our quantity of 475, subtract the 20 items we sold. Okay, and we're also going to update our total cost. So we got to subtract $57.12. So what do we get here? Twelve, 12.9957. All right, and it should be, since I've already have my formula in here, I copied it all the way down. So my new cost per item is slightly the same, except we're looking at the 10,000th of a penny. It has risen up. Okay, so that's that. I can go ahead and safely remove this since I've updated my inventory. And now I have this piece of information here. I sold $57.12 of coffee mugs. So here, I'm going to go ahead and enter that in for 57.12. Okay, so is everyone good so far? Okay. All right. Let's go ahead and also write our description because we need to be very specific, right? We have a customer that bought from us. So in this case, I'm going to indicate here customer A, right? They purchased 20 mugs, okay? 20 mugs. And we also have to also indicate the terms that we gave them. So in this case, because they put it on an account, we gave them a 10% discount if they pay us within 10 days. If not, they need to pay us in full in 30. So in this case, I'm going to go ahead and go back to my journal and I'm going to indicate that piece of information. So 10%, 10,
10,
net 30.
30.
Good. Now I'm completely done with this piece of information. Okay. So what happened next on the same day? Actually, no. We're done with May 6th. I was looking at May 8th. What happened on May 8th?
On May 8th, purchased 250 mugs at 275, freight $50 on account from Tuppy's Cove, terms by 1530.
Good. So we bought additional 250 mugs at 275 with the freight of 50. Okay, so since we know what we're going to be purchasing, right? And our keyword was on account. So here, let's go ahead and lay down our foundation. So on May 8th, what am I going to be putting here?
You're gonna put, so we did a purchase.
Correct.
So purchase is purchase is from me as the vendor, right? Or is it from a
The vet.
customer? Uh, well, it'll be vendor because it doesn't.
Mm-hmm.
It'll be accounts. Wait a minute, I'm getting confused. Is it accounts receivable? I mean payable
Okay.
for purchase?
Yes. So if we owe money to someone else and we put it on account,
Is
that's going to be accounts payable, right? Because it's a liability.
okay.
Another thing too is just think of it this way: when we're receiving something, it's your customer.
Mm-hmm.
When we're paying someone, it's going to be a vendor. So accounts payable, meaning we're paying them, so it's going to be a vendor.
Mm-hmm.
Accounts receivable, we're receiving it from our customers. So in this case,
Okay.
it is accounts payable. All
Okay.
right. But what am I going to be journalizing first? Because if we know that accounts payable is going to be a liability, right? We owe them money. We're not paying them yet.
Mm-hmm.
What am I going
For
to be? Go
the
ahead.
mugs, right?
Correct. We got to place it into our inventory. All right. And then we indicate this is accounts payable. So our mugs is 150 and our accounts payable is going to be 201. Now, we're going to stop here because I don't want you to journal. I don't want you to do the calculations twice. So we're going to go straight into our inventory worksheet. Now let's go back and review that information. So we purchased 250 mugs at 275. Freight is 50. So on May 8th, right? 250
Two.
at 2.
That's 687.50
Okay.
plus freight. Freight was $50,
Mm-hmm.
and the total is 737.50.
Good. And now we need to update our inventory. So in this case, good, because we're doing average costing or moving average. Good. So 705.
Cost per item is 2.8.
Good. Right? We don't have this anymore. Okay, so I'm going to get rid of it. But yes, that's my new cost per item, and that's my new total values all added up together. Okay, good. So now we know we calculated how much our total purchase price is, and we also have our total cost. So in this case, because we're dealing with perpetual inventory, we know that we're going to owe in grand total $737.50. So let's go back to our journal and let's indicate that right there. $737.50. Right? And I'm also going to throw in a little reminder here in my description that this was from Cuppy's Co.
And it was 5%, 15 at 30.
Cuppy's, hold on, Cuppy's Co. We purchased 250 mugs that originally cost me at $2.75 each. And I got a 5% discount if I pay within the 15 days. If not, I owe the whole thing in 30. All right. And again, so for your description, you can have it either centered, italicized, smaller, bigger, I don't care, as long as you have as much details as you want, as long as you have parentheses around them. You can put whatever piece of information to help you understand when did this or what the transaction was at hand. Okay, so here I've indicated the information that I want to place in there. All right, so I got to go back up here. I went too far down. All right, so I completed my journal, my first journal. So I'm at the end of it. So I can go ahead and move on to the second page. So what has happened then on the same day?
Returned 50 mugs because they were the wrong color and got a 50% discount.
Good. So we are attempting to do a purchase returns and allowances, right? Now, but with this one, remember everything goes into inventory, so everything has to be taken out of inventory. So in this case, we're not really returning anything, but what are we receiving from the vendor? We get a 15% discount. So in this case, right, let's look at our chart of accounts again. What accounts are we going to be using this time? Is it truly a discount?
Wouldn't it
Use an allowance.
wouldn't it just be accounts payable and mugs?
Good job, Julie. Of course, I was trying to trick you with that question. So good. So yes, it's everything's gonna stay the same. There's no dealing with any of these extra things because these are all for perpetual. The only same thing that concept will stay the same would be your sales returns and allowances. All right, but in this case, we're dealing with pure perpetual inventory. All we care is to take from our inventory and add everything in inventory, and we're going to take out of inventory. All right, so yes. So in this case, our accounts are going to stay the same. This time we're going to also indicate it's the same day. All right, and are we increasing or are we decreasing inventory?
Inventory should be under credit.
Good. We're decreasing the amount because we are, right? We're decreasing the value that we originally purchased it for by giving the 15% discount. What about the accounts payable? Are we increasing it or are we decreasing it?
Decreasing.
Decreasing. So accounts payable, right? And we know that this is 201 and 150. So now let's go back to our inventory worksheet and solve for this discount. So on May 8th, okay, we're not returning anything, but it's still gonna cost us how much? Okay, how much is it? How much did we originally purchase these items for? Two 275. Okay, I'm gonna go back and check how many items we actually returned. In this case, we returned 50 mugs. Okay, but we're not taking a discount on the entire amount. We're only taking a discount off the 50, right? Because the rest of them are all brown. It's just this one batch that they accidentally shipped, and they shipped us the wrong color, right? So in this case, we're only taking the discount on those 50 mugs. All right, so 50, okay. So we're gonna go ahead and calculate it here. You can do it in the worksheet itself. So here, I'm gonna calculate my total amount here. So I'm going to do my parentheses. I have a total of 50 mugs that I'm going to, that cost me $2.75 each to purchase. All right. And I'm going to take a 15% discount, which in this case, it's 0.15. So what is my total amount I am subtracting from my inventory?
$20.63.
$20.63. Okay. All right. And in this case, I'm going to pull it across so that because I'm still keeping that cell reference there. So if I didn't return anything, so I still have 705. But this time, my total cost of it is no longer $2,037 anymore. It is now subtracted, right? The $20.63, and what do we get?
2016.45.
2016.45. Now we need to recalculate our new cost, average cost per item, because now we have less total cost to deal with, but we still have the same amount of inventory. So in this case, we need to recalculate here, and I have it for a lower price. Okay. Now that I've already done my calculations here, I know that I returned a total of attempted to return, but they gave me a 15% discount of the total of $20.63. So I can go here back to my journal, and I know it's for $20.63. Okay. And then I'm also going to indicate here. All right. Return 50 black mugs, 15, call me, comma, 15, I cannot type, 15% discount. Okay. Good. Now, what's the next thing that happened? We completed our worksheet and we completed our journal. What is next? Ooh.
We sold 30 mugs for $10.
We sold 30 more mugs for $10 each. Okay?
Cash.
For cash. Good. So, shoot, what was the date again? May 10. May 10. You sold 30 mugs for $10 each. So, let's go to our journal.
Cash and sales.
Good. So, May 10. We're going to get cash for 102. And then we have sales, which is sales is 401. Right?
And then also cost of goods for the mugs.
Mm-hmm. Cost of goods sold. And mugs. So cost of goods sold was 501 and 150. All right. So in this case, I've already solved, right? I sold 30 mugs at $10 each. $300 should be your answer here. And then now I have to go to my inventory worksheet to actually solve how much those items cost me. So here, May 10, I sold a total of 30 mugs at 286.
6, 0,
What's my answer here? 85.81. So we'll clear those. 85.81. Okay. And let's update our inventory. So our new amount is now 675 items left, right? And our total here, we're taking 2016, 45 cents, and we're subtracting $85.81. So what is my total cost here? 1930.64, and my new average cost per item is now good. All right. We no longer have this, so we can eliminate it. So now we know that we sold $85.81. General journal. 85.81 is our answer. 85.81. Let's double confirm that. 85.81. Good. All right. And I'm going to also indicate here. Okay. What has happened next? On May 12th. Mm-hmm. Perfect. So I sold an additional 30. 30. I sold an additional 60 mugs. Okay? To customer B on an account. So what is going to be my account, my journal here? And not on the debit.
Is it accounts receivable?
Accounts receivable is first. All right, so I'm going to go up here and I'm going to copy this information. Because we're dealing with accounts receivable, we have sales, and we're going to do a cost of goods sold and mugs again. All right, so in this case, how many cups did we sell?
600.
Total 600, yes. Okay. Now we need to figure out what our cost of goods sold is. So we're going to go to our inventory worksheet. And we're going to indicate here that October 12th, May 12th, we sold 60 mugs. All right. So what is going to be the total cost of those 60 mugs?
71.61.
171.61. Good. Okay. Now I'm going to go ahead and transfer that information. So what is my new inventory now? 615. $1,759.03. And my average cost per item, let's recalculate that. Good. So I'm going to come here, and now I'm going to eliminate the piece of information. And I know I sold a total of $171.81. Or 61 cents. I'm sorry. So here, general journal, 17161. 17161. Right? And here, I'm going to indicate I sold this to customer B. Sold 60 mugs to customer B, and I gave them 10% if they pay in 10 days. If not, they owe me 30. Or they owe me in full in 30 days. Okay. What has happened next on May 15? Let's see. May 15.
Returns 30 mugs.
No, customer B returns 30 mugs for a full refund.
May 12.
Okay.
May 12 is
Okay. So on accounts, we need to. All right. So let's go. Let's look at our chart of accounts this time. This time, customer B is returning items from us. So what account would we be using this time?
Sales returns and allowances.
Sales returns and allowances. And how did customer B pay us?
On account.
On account. Good. So in this case, sales returns and allowances is going to be 406. So my journal here is going to be for May 15. All right, is my sales returns allowances, okay? How do we understand this? If we are, so what kind of account is sales returns and allowances?
Contra.
Yes, it's a contra account. Now, what is it a contra account to?
sales.
The next
It's
sales.
good. And if sales, what is the normal balance of sales?
Debit.
Sales is credit. So this contra account, how are we going to journalize it?
Oh, debit. Sales is credit. So
Ex-
the sales is debit.
Good, there you go. So sales, returns, and allowances for 605. Actually, 506. All right, and what are we decreasing? Are we 406?
406. Yeah.
406.
And what are we decreasing?
Accounts
Sorry.
receivable.
Good, right? We're decreasing the amount he owes us, right? Good. And accounts receivable is 103. All right. So this one we don't really need to truly understand this because we know we're just going to return what he purchased from us, okay? And we don't need to deal with sales tax. So in this case, since he's returning 30 mugs, right? He's returning half.
Mhm.
So how much am I going to be calculating here?
He's returning 30 mugs. Mug.
How much should we charge him for each mug? 10. And he's
$10.
exactly. So the total is going to be 300. Because he's returning 30 of them. And our original price that we charged him was $10 each. So now we need to give him back $300. Okay. And then I'm also going to indicate here customer B returned 30 mugs, full refund. Okay. Good. Now, does this affect our inventory worksheet?
Yes.
Yes, it does. We have to put it back because he gave us back he gave us back the 30 mugs. So in this case, we need to make sure that we indicate here on the 15th. This time, we're returning 30 mugs, and it's going to be for whatever we originally cost it for. So in this case, we only have one number and one number only. So we need to refund the $85.81. Okay, so that means we gotta add it back into inventory, which of course, that's not in real life, that's not what happens. But in this case, we need to calculate our inventory the way it is. So in this case, we are adding back our 30. So now we are back up to 645 items. And we also need to add back the cost it was for us to 85.81. Oh, 85.81. Okay. And then we have to recalculate, of course. So this time now we're having it back. It's still the same, but for the purposes of this class, it's good practice to do that so you don't forget to do it. So now we don't have that anymore. We can go ahead and pull our inventory worksheet down. Okay. And we've already indicated on our journal that we returned that amount. But because we had to update our inventory, what else do we need to include? Good. We need to put back the inventory, and we need the cost of goods sold. Okay, let me add that S in mugs. So in this case, this was 150, and cost of goods sold was 501. All right, and we know we calculated already. We needed to refund 85.81. Okay, don't forget, we do need to update our inventory because they actually physically returned the items. Okay, so in this case, I'm going to go ahead and indicate here. I don't need to say that customer B specifically did this, but we need to say that we returned a total of 30 mugs. Oh, forgot my ending parenthesis. Okay. Any questions to what just happened here as far as my entry here? No? All right. Now, common things that a lot of accountants do is if you have about like 3 or 4 lines, or so right here I have about 3, anybody can enter in a transaction here. So in order to prevent that from happening, we normally use a any kind of pencil or any kind of item that you can do to cross out that area, so then no one can enter in any information as far as that. So let me go into my insert and find my shapes. And I'm going to go ahead and use my line tool, and I'm going to go ahead and draw it between here and to the end of the page, because that is what I want to indicate, so no one can add any transactions there. Just like that. Right? And we're going to practice doing this when we go into our actual fictitious business. So now that we completed our second page, we are going to move on to our third page. Our third journal. Oh, I went up too high. Okay. So let's look at our scenario next. So in this case, what has happened next on the same day of the 15th?
Oh, we sold 25 mugs at 10 for cash.
Okay, so we sold 25 mugs for cash. So same day, so the 15th of May. Okay, and we sold it for cash. So what is my journal going to be?
Cash.
Cash.
Oh,
With 22 mugs.
Mugs
Good.
and sales. Or cash and sales.
yeah, okay, so we're dealing with one transaction at a time. So the first one is recognizing the sale. What did we sell? What did we receive? We received cash for the sale. Then the second part is now we're going to update our inventory, right? We're going to calculate how much we sold before we can take it out of our inventory. So in this case, I would not recommend you to squish it all in one type in this transaction, just because in this case, it is dealing with two different things, right? You're dealing with a sales perspective, and then you're dealing with your inventory. Now, let's say I have multiple inventories, right? And I sold multiple items. Then yes, I can combine all of those into one, which we will look at when we dive into our fictitious business, right? We're going to recognize that, okay, these are all related transactions, right? They're all affecting similar accounts or one account. In this case, these are two completely different transactions, and you don't want to mix them together. Even though it does follow the same rules and guidelines, right? It's still saying we're debiting our debit accounts and we're crediting our credit accounts, and they both are still equal. But in this case, they are two completely separate, different transactions. So we need to make sure that we recognize one transaction at a time. Okay. All right. So sales. How many items did I sell? I sold a total of 25 at $10. So what is my total sales going to be here? $250. Good. I'm gonna make that dollar sign. There we go. So 250 is correct. Now we need to solve for our cost of goods sold. So back to our inventory worksheet here. And this time we're going to be calculating the 18th. Oh no, 15th. I'm on the same day. 15th of May. but I sold 25 items and my total cost, my cost per item is going to be 2.860209. All right. So that should give me a grand total of you got 55? Okay, perfect. 7151. Let's go ahead and update our inventory. Since we sold 25. All right, good. 620. And what is my total amount that I subtract here? So 7151 gives me. Good. And my new cost per item is going to be good. 2.0. Okay, okay. So this one, it's more or less almost the same.
Yeah, I got a different number.
You did?
Yeah.
I got 2.860210.
So this divided by this. 2.860201.
10. So 210 at the end is what I got.
I got 2.86022096.
Huh.
Let's type in this and see what it is. So 1773.33 divided by 620. Okay, now I get a rounded number. Oh, okay, so I guess this number is wrong. Okay, so this needs to be 17. Oh, shoot, I forgot the number already. What was it?
1773.33.
1773.33. So 1773.33. Okay, and all right. So in this case, my Excel has recognized that this is bigger than the 773, which is weird because we've been calculating whole numbers. But again, that's 5% of accounting errors are actually are from Excel. 95% of it is the human that enters the stuff in the Excel. So make sure you know that. Okay, and be very careful. Make sure that you calculate this every single time and be careful. So here you go. I recalculated it and now I am on the right track. So we are at 9, set blah, blah, blah. But it's been rounded now. Okay, so let's continue on forth. So we sold a total of $71.51. So sold $71.51. All right. Now I'm going to go ahead and indicate in here my journal. Sold 25 mugs. Okay, so let's continue on. What has happened next? All right, so let's go back up real quick and look at our scenario. When did customer A purchase their items? May 6th, and we gave them terms, right? Okay, so if they meet the discount within the first 10 days. So if they purchase on May 6th and on May 18, do they get a discount? No, they missed it by a couple days. So here we're just going to recognize the payment in full with cash. Now let's look at a scenario again. Did customer A return anything?
No.
No. So that means their full amount is for their full amount. So I'm going to go to my journal. I'm going to go find that transaction for customer A so I can go ahead and bring that down. So customer A on May 6th, they owe us $200 even. Okay? So now we can recognize on May 18, okay, if our customer paid us in full, what are they essentially doing? What is my journal going to be? Good. Now, is my accounts receivable going to increase or decrease?
Your accounts receivable is going to decrease
It's going to decrease.
under credit.
Good, because they are paying what they owe, so they no longer owe us anymore. So in this case, what did we receive?
Cash.
We received cash, so we're going to debit cash because we're increasing our money here. And we're going to decrease the accounts payable because customer receivable, not payable, has paid off their account. All right. And we know this is 102, 103. All right. And we know they paid off us in full for the $200. And I'm going to also indicate here that customer A paid. All right. Good. Does this affect our inventory at all? No, because this is ultimately dealing with our sales, right? This is what they owe us. Now they're just doing their diligence and just paying us off. So this transaction does not affect inventory whatsoever. Okay. So then what happened next on the same day in May 18? On May 18, sorry. All right, and we received cash. So in this case, let's journalize that right now. So we're receiving cash for our sales. We also need to calculate our cost of goods sold. And we also need to update our inventory here. So 518. Okay, so how many items did we sell? Let's go back, I forgot. So on 18, we sold a total of 50 mugs. All right, 50 mugs at $10 each is 500. All right, comma. All right, so then now we need to solve for the amount of cost of goods sold we actually sold. So in this case, 518 we sold 50 at our cost per item here. Where are you at? Okay, all right. So okay, I was like waiting for you to answer the first part, but that's okay. I got you. So
143.01.
6, good. So 570 and yes, 143.01. We're going to subtract that from our 1773.33 cents, and we should get our 1630.32. So what is my average cost per item now?
2.860211.
2.6. Okay, good. So it changed by a 10,000th of a penny. Okay, we no longer have that. All right. So now we know how much we actually sold for the total of 143.01. Back to our journal. Okay. And I'm going to go ahead and indicate here that we sold 50 mugs. Okay. Let's pull the journal down a little. Okay. Let me see. We have quite some more transactions. Let's try to push through. I know it's already 11:30, but I want you guys to finish this off for the weekend. Just so then on Monday we start a completely brand new idea. Plus, this also gets us a little more practice. So let's go ahead and solve for the rest. Hold on. Okay. Yes, I know I gotta fix that, so I don't know why my thing is so messed up. Okay, so here. Okay, hold on. I'm trying to. Where is my information? I don't know why it's so messed up. It should have
It's in that
been.
because you have it in cell A, and then you put freight costs in cell B. So if you just click on cell A, you can copy it.
Cell A. Okay, there you go. Thank you for that. So let me get rid of cell B. There you go. So purchase 400 mugs at $2.85 each. My freight cost is $80. Oh, excuse me for that. So let's go ahead and get started. So purchase 400 mugs at $2.80. So okay, so you have a few choices. Like I said, I want to go into the journal to lay down the foundation that we have this, okay? So what was it? What was the date again? For May 20th? May 20th. And we know from the information that we've also placed it on account from Cuppy's Co. Again, they gave us other terms. 5%, 15, net 30. So here, again, same things, rinse and repeat. What are we journalizing? We're going to journalize our mugs, right? That's what we bought. We placed it on account. All right, we're going to owe them more money. Okay, so here, my mugs are 150. All right, so now we're going to go into our inventory worksheet. So for May 20th, we purchased 400 items at $280. All right, and my freight was $80, right? Okay, so here you go. What is my total purchase price? $11.20. what is my total cost here? 1,200. All right. And we're going to go ahead and pull it straight through. So we're going to add the 570 plus the 400, giving us 1,370.
So this is,
970.
970. Yes. Okay.
28, 30, 28, 30, 32. Are we adding?
We're adding. We're adding the total costs together. So
28, 30, 32.
good. 28, 30, 32. What is my new average cost per item?
2.917856.
2.9178, etc., etc. Right? And I'm going to eliminate this. So we're going to move a little quicker. So now that we know that our total cost is going to be 1,200, we go to our journal here. We're going to indicate that we purchased inventory for 1,200. Again, I'm going to copy this information here. We purchased from Cuppies Co. We purchased 400 mugs at $280. And we're going to receive a 5% discount if we pay within 15 days. If not, we need to pay in full in 30. Okay. We updated our inventory. Now what has happened next?
sold 30 mugs at $10 each for cash.
Good. So we sold another 30 mugs for cash. So in this case, I'm going to go here. I'm going to copy this information. Ooh, we just made it to our end of our third page. So for the same day, May 20th. So we sold our mugs for $10 each and we sold 30 of them. So your answer should be 300 here. Good. Okay. Now we have to go back to our cost of goods sold because we made a purchase, right? Our cost of goods sold is going to be different. So in this case, on May 20th, we sold 30 at what cost? $2.917. So what is my new cost of goods sold now that I have a new entry in here? Yes, 87.54. All right, let's go ahead and pull through. So 970 minus 30. 940, good. What is my 2830? 32. Subtract my 8751. 54. Good.
27.78.
Good. 78 cents is the ending, all right? And let's recalculate our cost of goods sold. Good. All right. And I'm going to get rid of that. Now that we know that how much we sold a total of $87.54, opposed to up here when we sold 30, we sold it for 85 $1,181. So again, because our new cost per item has increased, therefore the total has increased. So make sure you guys are aware of that. So now my new total is $87.54 for my cost of goods sold. So I'm going to come here, 87.54. $87.54. Right? And I am complete with this page, so we need to move on to the next. So we're almost done. We have we're almost done. So we got a couple, maybe 8 transactions left. Okay, and we got 15 minutes left. So let's go ahead. 22. What happened on the 22nd?
Customer B paid cash.
They paid in full with cash. Now, customer B, when did they actually make a purchase from us?
5/12.
5/12. They did, and they did a return. So do they still? And they get the discount. So let's go ahead and look at our chart of accounts. Okay, so in this case, we can actually apply a sales discount. All right, so that's 405. All right, so let's go ahead and look at what we have here. So you said they did the purchase on 5/12, you said?
Yes.
So here's accounts receivable, 5/12, right? We started off with 600. They returned to us half of it, so they owe us currently $300. Okay? But because they returned half of the items, so they originally purchased 60, they returned 30, so that means they only have 30 items left in their possession. So in this case, I know that my accounts receivable is currently 300. So I'm going to go ahead and indicate the date. So this was May 22nd. So I know that what am I receiving from customer B? How are they paying me back? They're paying me in cash. So that is one thing I can recognize there. Okay? And you said, Julie, you said they met the discount?
Yeah, so sales discount as well.
Yes, so cash. And they get a sales discount because, remember, if they received a discount, right, you're going to get less money. So understand it like that. Plus, it's a contra account to sales, so it should be a credit. And then lastly, they're paying off what they owe us. So accounts receivable. Okay. So in this case, we know, let's enter in our accounts here. My line is missing. So my cash is 102. My sales discount was
405.
405.
405.
And then my accounts receivable is 103. So we know that my grand total that they owe us right now is currently $300. Okay. Now, what discount did I offer them?
10%.
10%. So what is 10% of, in this case, you're allowed to do the whole thing because there is no sales tax. So what is the percentage? What is 10% of 300?
$30.
So they get to take a nice 10% off my 300, which is $30. So that means how much am I actually receiving? I'm supposed to receive $270. And in this case, I'm also going to do a little indicator that customer be paid. Oh, that is not what I want. Okay, so there we go. All right. Okay, what has happened next? We sold another 15. Then we have a sale for that. And then May 28th. This is oh man, this is all messed up. I gotta fix this. Okay. How do you guys feel? You guys feel okay? Do you want to just try to push and finish this all up? Okay. Again, we still have 15 minutes. All right. So let's go ahead and enter in this thing here. So we sold another 15 mugs at $10 each for cash. So my journal should appear to be what? Okay, so we just made another sale, right? It's with cash. So how many items did I sell? At $10 each. What the? All right, sorry, let me. Okay, so here I am. I got a total of 150, so we're going to go to my inventory worksheet. Okay, and I sold on May 22nd 15 items. All right, my cost per item is going to be for the $2.91. Okay, and then we updated our inventory. 15. 26,9901 should be correct. And my new cost per item should maintain the same. All right, and I'm going to go ahead and wipe that out. So from here, we know that our total amount that we sold was for $43.77. So my cost of goods sold is $43.77. And I need to also copy here. Sold 15 mugs. And I'm gonna indicate all this as left amount. All right. We updated our inventory, so we're good to go there. So what is next here? So this time, May 25th, right? What has happened here? Yes, It's a sale. Good. Sale for Memorial Day sales. All mugs are 40% off. Discount. All right. And you sold a total of 175 mugs for cash. So, again, what are we going to be recognizing as far as this? Okay. So, May 28. I'm sorry, 25, right? Memorial Day was on the 25th. So what am I receiving?
Cash,
Cash. All right.
the sales,
Sales. Sales what?
discount,
Sales discount because we have a store-wide sales. Okay. And then lastly, what are we? Yes, sales. So in this case, we sold a total of 175 mugs, right? If each cup originally is $10, so
150.
this is so we sold a total of 175. Okay, so my total sales here on cash 1750. So my sales discount is 405 and sales is 401. 401. So in this case, sales was $10 at at 175. So my total sales is $17.50. Now, with the discounted price, right? I get to take away 40%. Oh my gosh. Edit undo. So in this case, how much is my 40% discount?
700.
700. So I take this, multiply that by my 40%. It should be 700. Good. Right? That means I received 1050 as my cash. All right. What else do I need to include?
Cost of goods sold.
Cost of goods sold and my mugs. All right, so copy this and I'm going to bring it here. So let's go to my window here. And does a sales discount affect my inventory? No, because that was just a discounted price off the profit I'm making. So in this case, I sold a whole total of 175 mugs at the $2.91. Should give me about 510.62. All right. Inventory minus 175, so we should have 750. Good. And then what else here? Yes, ma'am. And solve the cost per item. Good. All right. So now I can go ahead and eliminate that. And I know that my total here that I sold was 510.62. So I go to my journal and I'm going to indicate I got 510.62. 510.62. Okay. And I'm going to indicate here Memorial Day sale, 40% off, and sold 175 mugs. Boom. Okay. Then what has happened next? Now customer C came into the store and was like, I don't like these brown mugs. Do you have any other color? I said, you know what? I have black mugs in my inventory. Would you like that? Is that a good preferred color? And he says, yes. And he decides to buy them all. And yes. And I gave him a 10% discount. Yes, I offer him an additional 10% discount. So, and he paid with his Visa credit card. So in this case, what is going to happen? What happens when customers pay on a Visa credit card?
Goes to checking.
It automatically goes to your bank. All right, the way you set it up, it goes automatically to your bank. So in this case, we're going to be using checking as a form of payment. All right. He's also received a little discount from us, right? So we have to include a sales discount. And he's purchasing all 50 black mugs. And I'm going to go ahead and give the assumption that those coffee mugs are still going to be priced at $10. So in this case, on May 28th, we received payment through checking. We received a sales discount because we offered it to him for buying in bulk. But also because we got rid of the items that we didn't want originally. And then we need to indicate that we had a sales. Okay, so in this case, checking is 101. My sales discount was 405. My sales is 401. So those 50 mugs, we originally cost them at $10. And we're gonna give him a 10% discount. So what is 10% of the 50 mugs that we sold? Oh, he gets to $50. Yes, close. That's fine. That's what we. Okay. All right, and then now we go ahead and subtract the difference. So we charged him how much? $450, right? And we also have to include what? Cost of goods sold. Yes. Our friendly little account here. We need to recognize that the cost of goods sold is there. My description is not going to be that, so. All right, so let's go into our cost of goods sold. So does our discount affect our inventory? No. So we sold another 50 items, costing me this much. Because we never took out those black mugs, right? We kept them into the inventory. In real life, you would take that out and separate it. So you have your brown mugs and then you have your black mugs. Okay, that is fine. So 700 left on inventory. Good. All right. We're going to do that. Okay, so we know that the total that we sold was $145.89. So we're going to indicate that here. 145.89. So 1445.89. This is going to be the same. Okay, and I'm going to go ahead and indicate here. Customer C. Actually, no, wait. What did I say? Sold 50 black mugs to customer C. 10% discount. Good. right? So the next portion, I'm going to go ahead and let you guys be able to handle this on your own. Because the last one is 700 units on hand. You should already know that. We just solved for it. And the last one is you're going to pay all three bills. And you go to Compass Co. all on one check. So again, I'm gonna go ahead and post the answers for this little small section. So all you have to do is just go back and answer that last question. But other than that, it is exactly 12 o'clock. I have to let you guys go. I cannot keep you guys any longer. But I will post the answers. So if you want to check your answers for the last section, you may do so. But other than that, have a beautiful weekend. Again, you have a quiz due Sunday, and it's on Orabund right now. It's ready for you to take it right now. You have journal number 4 also due on Sunday. And other than that, have a beautiful weekend. You may leave.
Thank you. You
Have
too.
a good day,
Have a good
everyone.
weekend, everyone.
Okay, thanks, Lynn.
Of
Bye,
course.
everyone.
Thank you for sticking it through with me.
Of course.
Okay, bye guys. Hi everybody. That's fine. I got it. I got your text. No worries. Bye. Lynette, did you? Oh, okay. That's fine. Hello. No worries. Take your time. I just finished my class.